Well, if you look at some of the evolution in terms of our outlook, what has changed compared to where we were in July, I think on one side is the manufacturing sector is deteriorating even faster than what we had expected. I mean, our clients are coming up with bad news, which basically gets them to trim even further some of their spend, for the end of the year. Positive sign around that is that they say that this is temporary and they have to resume some of the investment, going to next year. I think the second aspect is that we do see quite a bit of deterioration as well in the French environment, going into Q4. And again, more than what we had expected initially. And I think these two factors is really what created some evolution, in our outlook for the rest of the year. There's some positives, of course. The financial services sector is recovering, and we do expect to be back to growth, by Q4. That was one of the biggest headwinds for us at the beginning of the year. Also, the headwinds we had in telco and tech is resolving. So, that again is quite positive going into next year. And finally, the appetite for clients around transformation is quite high. We start to generate a good amount of booking coming out of generative AI. It's about 600 million now for the first 9 months of the year. We can see that really start to scale up in terms of impact on the business, and clients are really start to invest bigger amount of money to drive the change. And the pipeline overall of strategic deals continues to increase quite a bit, which means the appetite for client, the need to spend around driving real big digital transformation is there. So these are the positives, going into next year, even if we have to deal with some of the short-term headwinds, because clients are really trimming some of their spend for the end of the year to preserve, their profitability.
I mean, I want to get into that because you did headline to us that there could be some issues when it came to sectors that you were exposed to, from the autos to the aerospace and to the financial services areas of the market. But does that mean we are seeing cutback only on areas where they can cut back? I mean, what are the areas that businesses think they don't need to spend money on at this stage in the IT story?
Yeah, so Frank, it's not a question of spend. Is any program can be delayed. So all what it is pushing up some investment, to the future. So we don't see cancellation. We don't see people say, I'm not going to do that anymore. What we see people saying, I'm slowing down certain things, or I'm delaying, some things because I need to preserve, more spend. I need to preserve and cut costs for this year, and that's what we are seeing. And of course, accumulation of, let's call it bad news on this front, basically end up by basically having a negative impact on the top line in Q4. I think it's particular, for example, in France. In France, we see really steep cuts in manufacturing spend going into Q4. Again, we don't expect that something to continue into 2025, but at least in the short term, it's action that companies are taking. And yes, auto, and yes, aerospace, but we have seen as well in some other manufacturing clients, both in France and in Germany.